Welcome to PhillipCapital's weekly market watch. Commodity prices have been hitting the financial headlines, especially with the slump of the US dollar. With most commodities denominated in dollar, fluctuations in the currency do cause huge swings in prices. There seems to be an inverse relationship between the commodity prices and the dollar. What other factors affect commodity prices? Today, we have Mr. Aftar Sandhu, Manager, Asian Commodities from Phillip Futures, to share his views. Aftar, most prices of commodities have been rising in the last 2 quarters. What factors do you see driving them?
Fundamentals, macroeconomic and speculative factors are all playing a role in pushing commodity prices higher. The improving demand situation, supply constraints, low inventories, a weak dollar, and renewed fund interest are some of the general factors that have played a part in supporting commodity prices. Further, specific fundamentals of particular commodities like sugar and cocoa have also added to the imbalance between supply and demand.
Going forward, what's your outlook for commodities?
Going forward, a commodity shortage is most likely expected next year as output of metals and agricultural products rise too slowly to meet demand. We are expecting strong demand of cotton, soybeans, copper and zinc from China, which consumes about a quarter to a third of world production of these raw materials. Most of these are imported. There are production growth constraints in developing countries. This, together with swelling demand, will keep prices higher in the next 2 quarters.
You mentioned a weak dollar earlier. How does it come into play?
There are mainly 2 reasons. One, most commodities are traded internationally and are denominated in the US dollar. So a weakening dollar would push commodity prices higher. Secondly, we are seeing a speculative flow of funds from the dollar into commodities in search of higher returns.
Sugar is one of those commodities that have seen a spectacular rise. What are the reasons?
Sugar futures have jumped to the highest level since 1981. This is in anticipation of a second straight global production deficit. There had been bad harvests in Brazil and India. Strong consumer demand from Russia, Egypt and India are also supporting prices. Kingsman SA expects global consumption of sugar to exceed production by 8.3 million metric tons. This is wider than our 5.1 million tons estimated in June this year. There has also been renewed speculative interest in sugar, and we are seeing money flowing in. Hedge fund managers and large speculators are still holding net long positions according to CFTC data. The technical picture, however, looks overbought, with some technical indicators showing divergence. On charts, it looks like a correction is due.
Thank you, Aftar, for your time. That's all for today. Stay tuned next week for more market updates.